All right, Brewer crew, welcome back to another trade update. Wow, it's been a while since I did one of these, but I figured I'd come back in and give an update, so let's get into it. One of the things I wanted to mention going forward is that I'll be branching out into plays and strategies that are not just very short-term plays, but also other more longer-term plays. If you watched the previous videos, you know that I love finding very cheap spreads that expire the week of and do things like turn $0 into 50 cents or more, but many times the best opportunity isn't always going to be available in the current week. Sometimes when the market is figuring itself out and just going sideways, it's not a bad idea to build a position further out in time, and just focusing on weeklies in that case doesn't really make sense. With that said, let's take a quick look at the markets for a bit. In ES, we are basically hovering near that trendline resistance. I do think the market ultimately wants to break out of this resistance. I don't think we'll pull back hard, especially with the holidays coming around, which is generally bullish. So watch that trendline resistance for a breakout. In the NQ, this chart looks like it's consolidating in such a tight range right under that trendline resistance. I think I'd rather play a breakout in NASDAQ via any of the FANG Man stocks, which have just been pretty sideways lately. They did tick up a bit today, but yeah, I do think the breakout here will be stronger, and I'll be keeping a close eye on this. And a look at the Russell, just crazy bullish. Looking at the weekly chart, we have clearance all the way up to the 1272 fib extension at around 1923. So that's an upside target to aim for and take profits if you've got any long exposure in the small caps. Now, as for what we've been doing in the chat room, last Friday, we put on a position in Roku. We got the November 27th, 270, 290, 300, 330 call condor for $2.22 debit. Since then, I actually made a few adjustments to this and rolled a few of the strikes around. And finally, I'm at a 272.5, 280, 290, 330 call condor. So far, I've taken in a 278 credit from these profit locking and delta adjustments. So if Roku falls flat on its face, this trade will still be a winner, but there's a max potential of $7.50 on this current spread. Right now, it's worth about $3.80 or so, with a decent runway to the upside between 280 and 290. So we'll see what happens with this one. Remember that Friday is a low volume day, so there might not be too much price movement across all stocks, which will be good for this spread. So we shall see. And another trade that we got into last Friday was Tesla. We bought the 550, 585, 630 call broken wing butterflies, expiring this Friday for a $1.62 debit. This one happened to play out quite nicely so far. Reason we got in was probably the same as everyone else's. Hype was coming back into Tesla, so we expected that it would continue higher, and I wanted to make this fly at least 30 points wide with enough distance above that previous all-time high level just in case it runs hard. So we'll see what happens going to Friday. Currently, the spread is worth about 16 bucks. I took a third of the position off today at $10.50, then the rest of it except for one fly at $14.65. I am now just holding that one last butterfly, so we'll see what happens. The spread has a max value of $35, which is about $20 more upside. Obviously, I'm not going to wait around to try to make all of that, but anywhere above $20 to $25 would be great. So we'll see what happens on Friday. There's going to be lots of theta decay in our favor here. For slightly longer term trades, I got into Apple. I currently have the 125, 131 long call vertical for the December expiry right at the end of the year, financed by the sale of the 90 put and the 135 call. This costs a total of 20 cents a debit. The position is currently down by about 15 cents per spread because Apple has just been going sideways, and I need this to move up higher because I do have positive deltas, but that's fine. I did anticipate that FANG Man was going to need some time to work itself out, which is why I went for a longer duration on this trade. If NASDAQ can get its act together and make another run higher by the end of the year, maybe with all of the holiday hype, then this trade might work out. Again, we'll see. And another trade that I have on right now that is also expiring at the end of this year is on the ES. I got the 3300, 3120 put ratios for a $1 debit, which is equivalent to 50 bucks a spread. This is kind of just a cheap downside protection. I'm not actually expecting a crash, since that would actually be bad for the spread, since I'm short 2 times the 3120 puts versus the long 3300 puts. But a gradual pullback to that 3300 level over the next month would expand the spread very nicely. 3120 is where I think if any downside were to happen, 3120 should be a safe area to target because of the 200 MA. Honestly, I do think we will just float higher into the rest of the year, but in case we don't, I think this is worth a shot. You never know with this market. And if we do crash harder than I'd like, then I'll just buy the 29.40 put to turn this into a balanced butterfly. And hopefully that purchase wouldn't cost too much at that time. All right, but that is it for today. Unless there's something major, I'll probably be giving updates less frequently since all of the juicy stuff happens in the chat room anyway. So if you're interested in that in our trades, check out the link to our Discord in the description box below. We just entered some new positions in Amazon, Chewy, CVAC, and many others. So make sure to check those out. And as always, feel free to leave any questions or comments below and I'll answer them. But for now, stay safe, Brew Crew, and I'll catch you in the next video. Cheers.